All right, welcome to The Explainer. Today we're digging into RH's latest earnings call. And wow, it's a real tale of two cities. You've got this story of near-term pain clashing head-on with a massive long-term vision of global dominance.
So the whole story of this quarter really it just boils down to this one major conflict. On one side, you've got the immediate reality, right? The stuff that makes Wall Street nervous, missed estimates, a guidance cut. But on the other side, you've got this incredible ambition, this long-term play, fueled by surging demand and a frankly spectacular launch over in Europe.
And the market, well, it didn't waste any time making its opinion known. The stock dropped almost 5% on triple the average trading volume. What that tells you, loud and clear, is that right now, investors are way more focused on those immediate challenges than they are on the long-term story management is trying to sell.
Okay, let's get into the nitty-gritty here. RH missed on both the top and bottom lines. Now, the revenue miss, it was pretty slight, not a huge deal. But that EPS miss, that was nearly 30 cents, and that is what really got investors' attention and set a pretty cautious tone for the day.
All right, Section 2, the tariff headwind. To really get why the market reacted the way it did, we have to talk about the elephant in the room. The main reason for both the earnings miss and that guidance cut comes down to one thing: a massive headwind from tariffs.
You know, it was interesting. On the call, CEO Gary Friedman didn't just frame this as a problem. He spun it as a strategic opportunity. His argument was basically, look, we're strong enough to handle this storm, but a lot of our smaller competitors aren't. So in a way, these tariffs could actually help RH consolidate the industry.
And they didn't just talk about it in vague terms. They put a hard number on it. We're talking about an additional $30 million in tariff costs just in the second half of the year. Let's be really clear here. That is a direct hit to the bottom line, and it explains a huge chunk of why the market is so worried.
And what happens when your costs go up by $30 million? Well, it translates directly into a cut in your full-year forecast. Management was pretty clear that this isn't just about the tariffs themselves, but also the ripple effect. Things like delaying product launches while they figure out new pricing.
So on top of the revenue cut, they also had to trim their margin outlook pretty much across the board. They broke it down for us too. They pointed to a 200 basis point drag from that big European expansion, which, that's just the cost of doing business and growing, but also another 90 basis point hit specifically from tariffs.
So how are they fighting back? Well, with a really dramatic pivot in their supply chain. I mean, look at this. The plan is to slash their imports from China from 16% of everything they bring in all the way down to just 2%, and that's by the end of this year. This is a huge operational shift, and it all hinges on their ability to ramp up their own manufacturing right here in the US.
Okay, next section. A global vision unfolds. So against this whole backdrop of tariffs and caution, management spent a lot of time on the call painting this incredible long-term picture. This is the other side of the coin, the big picture investment thesis for RH.
And look, they've got proof that this strategy works. Just look at RH England. This was their first international gallery, and in its second year, demand surged an absolutely incredible 76%. Now this is huge, because it proves the brand has appeal even outside of a giant city like London or New York, which that just dramatically expands their potential market.
But the real centerpiece of this global vision is the brand new RH Paris. The company is very clear. Don't call it a store. They see it as an immersive global destination. I mean, it's designed to manifest dreams, complete with multiple restaurants, a design library. The architecture is just stunning. And the early results out of Paris? They are seriously impressive. Management said on the call that traffic, and more importantly, the design demand, are already outpacing their flagship New York gallery. That's a huge signal that Europe has some serious pent-up demand for what RH is selling.
And you got to understand, Paris isn't a one-off. It's just the start of this accelerated global rollout. They've got London and Milan slated for next spring, and the bigger plan is to potentially double the size of the entire company in the next 5 to 7 years. And that growth is going to be driven almost entirely by this big push into Europe.
All right, this brings us to our final section, the next call. This is where we try to square the circle, right? We take the market's short-term fears, weigh them against management's long-term ambition, and try to figure out what's the trade.
So you've got this massive disconnect, right? The stock price is getting hammered because of tariff news, but at the exact same time, their core international growth story is just firing on all cylinders. So the big question is, how should you, as an investor, be thinking about RH right now?
Okay, here's our take on the plausible trade. It's all about unlocking the value that's kind of hidden on RH's balance sheet. Think about it.
They could monetize their real estate. We're talking about roughly $500 million in value there, and they could also convert about $300 million in excess inventory into cold hard cash. If they do that, they could fund their entire global growth plan and pay down debt. That would create a massive catalyst for the stock, and the best part is, it has absolutely nothing to do with all this tariff noise.
So, looking ahead to the next quarter, what should we expect? Well, in a word, volatility. The market is going to keep weighing this ongoing tariff pressure against that really impressive demand growth and the whole European success story. The key thing to watch, for us, is whether that plus 13% demand trend continues to run ahead of their reported sales. That's the real tell.
So, our official rating on RH is market perform. Look, the long-term global vision is incredibly compelling. The brand heat is just undeniable. But the near-term tariff situation and all the macro uncertainty, those are creating some pretty significant headwinds that are going to cap the stock's upside, at least until we get a little more clarity.
This is not financial advice.